Hello everybody and welcome to Street Smart Investing. I'm Albert, and today this video is for anybody who is watching, and it has to do with a questionnaire. It's only 5 questions, as you can see, and basically it has to do with your investment profile and your investment portfolio. So with this questionnaire, it's basically going to determine your portfolio, and that's pretty much it. The title for this is called "What Kind of Investor Are You?" And again, you have to determine those risk factors. And with those risk factors, you just want to, refresh your. If you're a new investor, this is definitely something new to try. If you're a pro investor or amateur or whatever level investor you are, this quiz can also be taken for you because it can be a refresher for people who want to see where they stand in their investment decision and to see where you want to continue with your strategies. So let's begin. What kind of investor are you? I don't know if I should read that, but maybe you guys can see that. I'll zoom in a little bit on that. So anyways, I just want to skip to the more important parts, and definitely I will read this. So let's begin. It says, when you're making your investment decisions, you should consider the three main factors: your risk tolerance, which is the amount of risk you can accept in order to obtain the returns you want. Number 2, your time horizon, the amount of time pretty much on your side so your money can remain invested. Number 3, your investment goal, the amount of money you need to save in order for your retirement to become a reality. Usually the goal is for retirement. That's the majority of the reason as to why people invest, because they want either financial freedom. And again, number 2, well, lately it's been between younger people as myself. They want to, I wouldn't say retire early, but they just want an extra income, or they need supplemental income. They just need another source of income, pretty much. Instead of having a second job, you just want to have a safety net, pretty much. I don't think people like myself are thinking about retirement, but I know they're putting away for retirement. But I mean, they just prefer to have basically a secondary income, a personal income, and do it themselves instead of an advisor, and putting away for retirement as well. So those are the two. I mean, I don't know the percentages, or I don't know the demographics for it, but those are the two main reasons, because financial freedom and because of retirement, as to why people invest. So let's begin. It's only 5 questions. So when you answer these questions, I want you guys, whoever's watching this video, answer very, very honestly, because this is going to determine your portfolio. And if you don't, then it's going to confuse your decision and your portfolio. So again, it's not like you read the question, oh, let me select the highest points. And no, it doesn't work like that. Because when you do something like that, you're being indecisive basically, and you're changing your strategy. So this is pretty much helping you for your profile, your strategy, and your investment. How do you say, your portfolio, pretty much, what kind of portfolio you should be having. So let's begin. Question 1, how many years do you have until retirement? And then you choose the letter, and then you write the point as well next to it. Question 2, when it comes to making investment decisions, which of the following best describes you? So you could pause the video and make the selection and keep playing it in a few seconds. Question 3, are you willing to take on more risk in exchange for potentially higher rates of return? Number 4, when it comes to making investment decisions, which of the following best describes your philosophy? And question 5, which of the following best describes your current attitude toward investing for retirement? So after you answer all these questions, each point that you wrote for each question, you're going to add them up. And this is why I have my phone covered, because this is a surprise. And this is pretty much the answer sheet behind the phone. And this is going to lead to the next step. And this is how it determines your point system and your investment mix. Small little paragraphs, but very, very accurate. So you write down your point system. If you scored, and there's no wrong answer, this is nothing to feel like, oh, like I should have scored higher, or I want to do this one, but I got this one. You just really again, that's why I say you have to be honest with yourself and really commit to your answer, because if you're going to be indecisive, then you just have to really be sure of what your answer is and see if this might work for you. I mean, if you scored not too far from the one above you or below you, that could work. But which I mean, like if you score, let's say moderate, right? Like 10 to 11, these two might work for you. But if you're moderate and you score and you want this one or you want this one, they may not work for you because they're too far off. These are just, the scoring system is way too wide for what your answers have selected. So maybe doing the questionnaire again, even if you did do it again, it might lean towards this one or this one. So that's all I can say for you. Either the one below it or above you. And again, if you scored this one, there's nothing below it. So you might want to jump into the next one or the previous one. So I hope you guys understand what I mean. So yeah. So there you have it. So you add up your score. And now this is the next question you guys might ask. How do I have a conservative portfolio or moderate growth, or aggressive growth portfolio? Now that leads me to my next sheet, which is here. This is your investment mix. Now, again, I said, remember a few minutes ago, I said one of the main reasons is because of retirement. And the reason I'm mentioning that is because here you see bonds. And with bonds, that usually reflects towards people more towards retirement. But in another case, if you're younger and you're not closer to retirement, at least 10 years, if you're more than 10 years, then yeah, you could easily take out all the bonds for this. I mean, just the word, not the percentages. Just take out bonds and you can actually substitute that for like mutual funds or commodities, or both of them, or a mix between ETFs and mutual funds. What I'm saying is, instead of bonds, there can be a substitute for something else with a wider variety. So again, I didn't write that down, but that I'm just explaining to you. I'm explaining that to you now, so you guys can understand that. So yeah, bonds can be substituted for ETFs, mutual funds, or closed-end funds, or depending on what you like, pretty much how you feel comfortable with what your portfolio investment is. So there you have it. You have for conservative, you want to have 0 to 15% cash. I think this is self-explanatory. And I hope you guys can see that, and you can see even the pie charts here. Giving you a few seconds to see that. So next up is the risk versus return. International stocks are the highest risk because, again, they're not major markets, and these are really non-US stocks, so they carry greater risk, but also they can carry greater returns. Small company US stocks, this is considered companies that are 2 billion in market cap or less. Medium company US stocks, these are considered 2 billion to 10 billion market caps. Large company US stocks, from my understanding, these are companies that are 10 billion market caps or higher. And balanced funds, it can include a mix of these, or as well as a mix of bonds or mutual funds or ETFs and all the other varieties. Now, interim US government and corporate bonds, again, that just has to do with bonds. Bonds are basically loans, and those loans, basically you're loaning money to the government. That's pretty much it. But they just take a longer time frame for a return and for you to pay and get the returns back. You have a short-term loan and those long-term loans. US Treasury bills, I don't know how that works. I don't know what funds those are. I don't really know how that works. But it's probably tied into a bond fund, I'm guessing. So yeah. Another term you guys might not know about or hear about, I don't know if they might throw it in balanced funds, but there's such a thing called derivatives, and those are actually similar. Well, it's pretty much like commodities, you know. Commodities such as, like, you could have gold, oil, or corn and copper. You know, they get into like every single commodity because you have like popular commodities and then you have like the whole list. So basically derivatives are pretty much like the whole list of commodities. I don't know every single commodity off the top of my head, but you can easily Google that and research that. And that's pretty much it. So I hope you guys learned something. I hope you enjoyed the video. Again, if you're gonna invest in the stock market, again, this ain't investment advice. I'm not trying to, how can I say this? The decision that you make, you know, is for your own purpose. But again, this is only a guide as to your portfolio mix. I can't tell you what specific stock to look up, you know, and then I only provide, like in my videos, the evaluations. I can't, and then a lot of people always make recommendations like, I want you to buy this stock. Oh, this stock is good. This stock is hot. It's popular right now. And I see a lot of people do that, and I don't know why they do that if they're not really registered as CPAs. You know, everybody seems to think they're a registered financial advisor when a lot of people are not. And they're trying to give advice and stuff, but it's like, see, there's a difference between recommendations and advice. And then, like, when you're giving recommendations, in my opinion, I think it's more like you're trying to help the person and help them understand so you can learn and grow together and then ask questions and figure out things together. But then there are other people and other channels out there that they kind of force you. I wouldn't say force, but it's like they're pushing this stock like, you know, like as if it's their favorite stock, but they're not going to tell you that. And then they tell you about it, but they don't really show you. They might show you a few numbers and stuff and talk about why they're a good stock right now. But you just, again, you have to do your own research again. And for a disclaimer again, when you choose stocks, obtain and read the prospectus before making any investment decision. You should use your own investments based on your particular objectives and situations. Be sure to review your decisions periodically to make sure you are still consistent with your goals. So you may want to wish to consult a financial advisor for more information. So again, like I said earlier, you might have scored, let's say a 10 to 11, but then you say, hey, wait a minute, I don't like how this looks. Maybe I might want to take the quiz again and see where I actually stand. Hopefully I can get more of a growth portfolio because I want my stocks to be more in the 80% range, for example. I'm just giving an example. So you take the quiz again, let's say you get a 12 now. So again, before you scored this one and you scored this one, even though it says 40 to 70 and this one's 50 to 80, these 10% differences, they make a big difference. And that, for people starting out, that might not seem like a big difference, but in reality it is. It's a really big difference. So like, I'm gonna keep it simple. Let's say you choose 10 stocks, right? Out of the 10 stocks, we're talking about, so you choose, let's say 8 stocks. For this one, you're choosing 7. So you're choosing one less stock. And again, that one stock could be, you know, something really, really good. And then you have to give that up. So it's like you're trading in a stock for, let's say an ETF, you know? So it all varies, you know? That one little change can just make a big difference. This is why I say each investment portfolio is different and according to you based on your quiz. So, yeah, I hope you guys enjoyed the video. If you've seen my previous videos, I work on sectors. I do have a sample portfolio that you guys can look at. I think it's on my homepage. It's a sample long-term portfolio, affordable. It's a mix of income, growth, and value. And yeah, I like those stocks. Pretty much it's all stocks. I don't have any bonds in that portfolio. The cash, yeah, you could say it has some cash because you do have dividends in there. So you have automatic returns with that. And yeah, your investment mix just depends on you. So thank you for watching, and I hope you guys learned something. See you in the next one.